Hey guys, welcome back to the channel. So in this video we're gonna talk about stock screeners, how to find 5 different kinds of screeners that you can look for. So you have for short term, you have long term, you have looking for dividends, you're looking for best value, and also you're looking for small gems. So today we'll look into these 5 different types of screeners. So for each of the screeners there is a few kinds of filters that you can add, and I'll show you how to add, what to add, and what each filter is, basically the purpose of it. Okay, so first thing, in your trading view you can hit the plus button, and then this one will come up. You can choose add screeners. So in your screeners, when you click on that, you can choose on stocks. So now there is this thing showing up to you. So you can see market, you can choose depending on what market you want. You can choose USA, India, Germany, Japan, Canada, Hong Kong. And then if you want to choose a specific market, you can go to more markets, and then you can find your own country. Let's say I'm currently in Malaysia, so I'll choose in Malaysia, and then depending on you. But today we'll just keep it simple. We'll keep it US. Click on apply, and here you have different kinds of filters, which I want to start from scratch. So let's look at it. Let's reset everything, remove everything first, and then click on save. So first we will keep it as the short term stocks. So we'll save it first. So now you have your own, like a screener. So now we can add our own filters, and then we can filter down from so much of stocks. We can filter on to many, maybe around 10 to 20 or 30, depending on what kind of filters you use. So here actually you do have predefined filters, but there is good and some not that useful that you don't need. So we will keep it very like, how to say, it's more to specific to what you want, so it's easier for you to see and go through. Okay, so now we will add our first filter. So this is market capitalization. So first I will add everything first, then I will explain what each of it is. Okay, so average volume, this one will go to 30 days. Next is price, and then next is beta. This one will choose to 1 year, and then ATR, average true range, and then SMA, simple moving average, and then we'll add performance percentage, year to date, add filter. Okay, so first one is market capitalization. So here when you can press, you will have this kind of things where you can choose predefined values. We will go through manual setup where you can put exactly what you want. So we can just enter 500M, so it means 500 million. So now it shows all the stocks which has market cap above 500 million. So everything above 500 million. Why we do this is we want to, this is like the first layer of risk management. We want to filter out all the micro cap stocks, which are often, quite illiquid and very easy to be manipulated. So this one is keeping our focus to more established companies. So next thing is average volume, manual setup. We want the average volume to be higher than 1 million. So this is 3 into 3 into 3, 1 million. So now the average volume is above 1 million. So why we do this is because more volume equals liquidity. So when you have a lot of liquidity in the market, that means you can buy and sell large quantities of the stock without your orders being impacting the price. This is what they call as slippage. So I have shared this in a previous video. You can watch that as well. I'll put it at the top. And this is to make sure that you can get in and out of your position instantly without having to, bid higher or lower. The next is price. Price will keep it above $10, anything above $10. So this is just to remove all the penny stocks. And then next is beta. So what is beta? Beta is basically measuring a stock's volatility relative to the S&P 500. So here you have the chart of S&P 500 index. So a beta of 1 means it moves tally with the market. That means if it goes up 10%, it goes up 10% in those stocks. But we chose a beta of above 1.5, means we chose something that is 50% more volatile than the market. So you need basically volatility to make money in trading. So you choose something which has a high beta, so that will provide the better movement. Next is ATR. ATR is average true range. So average true range we chose above 1. So this is basically measuring the average daily price range in dollars. So average true range of $1, it means that you are ensuring the stocks has enough large daily range between the high and its low. So to enter and exit, to have a profit. Simple moving average we chose above the price. So this is basically like our trend filter, where we are looking at stocks that are trading above. So how it looks like on the chart is, we come to indicators, we put SMA, and then we change it to inputs, we change it to 50. So this is just to show you what it basically looks like. So basically we want the price to be above the moving average. So what it means is basically we are trading in the momentum, not when the price is below our moving average. So something like this, something like this, like that. Okay, and then the last one is performance. So this is basically just an filter saying basically what is currently up now, giving narrowing down our list to something that is showing strong buying pressure in the day. Okay, so now we have a list. You see, from so many stocks we have left with only these stocks. Here what you need to do is click on save. So now you can always access it under short-term stocks. So anything that follows this criteria will be shown in this screener. Okay, so let's move on to the next list, which is for long-term. So we can now create a new screen, and this will be our long-term screener. So same thing, first we remove all the filters and then we add one by one. So I'll just add everything first. Okay, so now same thing, but we have changed a few things. So for long term, we want something to be greater than 10 billion market cap. So we want only the established industry leaders. So these are more stable, they have wider economic competitive, some kind of competitive advantage, and they are less risky to for long-term portfolio basically. So next is ROE. ROE is return on investment, return on equity. So this is a measure of quality. It tells you how effective the management is using the shareholders' money to, generate some kind of profit. So we want to choose something which is greater than 15%. So this is considered a very good, well-run, profitable business. And then the next one is revenue growth. So revenue growth, we will change the period to annual, year on year, and we will choose above 10% basically. So for growth stocks, we want to see the revenue grow, and we want to make sure the company sales are increasing. So to see this, we will put this indicator to show all those companies that has this filter. Next is earnings per share, diluted growth. So this one we will choose at greater than 10. This one we will choose period, we will choose same, annual, year on year, and this is greater than 10%. So a company must also grow in terms of their profits. So this one will confirm that the profitability is growing alongside with their revenue. So this is to indicate a more efficient and scalable business model. Next is debt to equity. So we want the debt to equity to be an annual debt to equity below 0.7. So why we do this is to make sure we have a very low debt to equity, meaning the company is not over leveraging and can easily handle some kind of downturns. So this is to ensure this is a responsible management team, and it is a resilient business basically. And last is analyst rating. So we want to keep this buy and strong buy to make sure that a lot of people are entering to this market and it's slowly going up. So now once we have done this, we can save. So now we have short term and then we have long term. So long term, there is quite a number of it. And then let's move on to the next one, which is dividend income screener. So here we do the same, we remove all filters, and this one we add same thing, capitalization, dividend yield, dividend payout ratio, price to earnings ratio, and dividends per share growth. Okay, so now let's go one by one. So for market capitalization, for market cap, we want to choose something which is greater than 10 billion. So because we need established companies which has large cash flow, they can maintain their money to grow their dividends. So we want very big companies. For dividend yield, we will set it to annual, and we want to set in between 2% to 6%. We don't want it to be too low and we don't want it to be too high, because something which is too high can't be sustainable, and something which is too low might not be even worth it. So we'll keep it to 2% between 2 to 6%. And for dividend payout, so I keep it annual, we keep it less than below 60% dividend payout ratio. So this is a very important dividend safety filter. Why is that? Is because it shows what percentage of the company's profits are paid out as dividends. So a ratio below 60% means that the company has a very large safety cushion. It still retains a lot of cash to reinvest in the business and can also maintain the dividend even if the profit has dipped. Okay, so this one we keep below 60%. P&E we keep it between less than 50, so we keep in 0 to 25, less than 25. So anything above that will be, overvalued. We want to keep it somewhere in between this value, which is we are not overpaying for the stock, basically price to earnings ratio. And then for DPS growth, dividends per share growth, we keep it greater than 5%. So we looking for companies that can grow in dividends. So a great dividend stock doesn't just pay the dividend, but it grows annually. Year after year it's growing. This is what we want to look for. So now we have so much of stocks that we can choose and try to invest on this. Okay, so now we can click on save, and then we can go on to the next one, which is looking for bargain. That means we are looking for value, the best value. So here we do the same. I'll fast forward this. Okay, so now we have market cap, P&E, price to book, current ratio, F score, and net margin. So for this, for the best value, we're looking for market cap which is above 2 billion, above 2 billion, because we are looking for companies that are, in the verge of, it's not to say overvalued, not to say undervalued. We're looking at that sweet spot, basically. So for price to earning ratio, we're looking for anything which is less than 15, something which is not too much overvalued. So for price to book ratio, we are looking for less than 1.5. Current ratio is greater than 2. We are looking at quarterly. and for F score we are looking for greater than 6, and for net margin annual we are looking greater than 5. So basically price to book ratio is, so the company's market price to its net asset value, which is, they call it as book value. So a book value less than 1.5 basically means you can be buying the company's assets and all for a bargain. So this is giving you some kind of a margin of safety. So current ratio is the current ratio between the current asset divided by the current liability. So this is the measure of short-term financial health. So the ratio above 2 means the company has more than twice the liquid assets to cover its short-term debt. So this is a sign of a very good value company, not falling for the value trap. And then this is called Piotrowski F score. So this is quite a powerful tool for value investing. It's basically like a 9-point checklist that scores a company based on profitability, leverage, and operating efficiency. So a score of 7, 8, 9 indicates a very healthy company, that is, it's improving. So we are choosing something that is greater than 6 basically. And then net margin is basically a value stock must be in a good business. So we want to make sure the company is actually profitable. So a positive net margin will confirm that. So here you will have all the stocks. We can do the same thing, we can save it, and we can move on to the last one, which is small cap gem. So this is where you will have high risk, high reward. You will try to find the companies which have, this is quite risky basically, but for the sake of the video we will do it to show you. Okay, this one is revenue growth, and then gross margin, and then you have debt to equity, and then you have free cash flow, and you have analyst rating. So first one, market cap, we will keep it in between 300 million to 2 billion. So this will isolate the small cap universe basically of stocks. And then for revenue growth, we will keep it annual, year on year, and it's greater than 25%. For gross margin, we will keep it greater than 50%. So we want to look for very strong scalable business. And for debt to equity ratio, we are looking at annual, and we are looking at less than 0.5. This will give us a very lean, finding for lean and low risk operations basically. And for free cash flows, something which is above 1 million. You know, they have a lot of cash basically, and analyst rating is something which is not equal to sell. So neutral, buy, and strong buy. So here we will filter out all the small gems that we can buy. That will give us the best. It's high risk but also high reward. You know, they have, it's basically a rapid growing companies that have potential to become large companies basically. So that's all for the video today. I've shared how to look at the stock screener, how to filter out based on all the different kinds of filters there is in TradingView. And this is all completely free, so there is no need of paying to use this or to check data, nothing. And here you can also look for different kinds of filters that you can. Let's say you want to choose only, let's say, finance sector. You can press this. Okay, no, you can go here, put to sector, and you can choose finance sector. So here only will show finance sector. So let's say you want to reset, you're looking for maybe price, so we can add price. We want to see something which is $5 and below. If you don't have much capital, you want to buy something which is cheap, something like that. So you can play around based on all this to find some kind of stocks that you like, and it applies for all different countries as well. So I hope this video is some kind of value to you, and if you see a great value, you can always like, subscribe, and wait to see more videos like this. And I'll explain more things, more different kinds of free tools that you can use to level up your trading game. Thank you so much for watching.